Morning, everybody. Welcome to Moving Markets. My name is Jeffry Dunyon, owner and founder of Safe Option Strategies. I don't do this very often in moving markets, but I'm going to do it right now. I'm going to make a huge plug for going to safeoptionstrategies.com. You've got to go over there. You've got to take a look at what we're doing, because if you're a follower of the stock market, if you have money in the stock market, chances are you're getting your teeth kicked in this week, and it sucks. But I'm telling you, one of the things that we're very good at doing at Safe Option Strategies is teaching you how to never lose money in situations like this. I'm grinning and smiling in the midst of everything that is happening. I couldn't be more delighted with my portfolio and the performance of my portfolio, even though I don't like what's going on in the markets. I don't like what's causing it. I don't like what the fallout is, and I don't like that it's hurting you and hurting your portfolio. But let us teach you how to fix that. Let us teach you how to not be negatively affected by what's going on a week like this in the stock markets. We are, as we open this presentation, the U.S. markets have been open for about an hour and 10 minutes. It's almost 8:40 Mountain Time, which makes it 10:40 on the East Coast. As we speak, the United States delegation and the Chinese delegation are meeting right now. They are meeting to talk about the continued China trade deal. At midnight last night, tariffs went into effect, an increase of 25% on tariffs. And initially, it looked this morning like the market wasn't going to overreact to it. As the market opened, in the first 10 to 15 minutes that the market was open, the Dow was only down 70 to 100 points. It was kind of going back and forth. I think it briefly dipped down 120, and then it came back to where it was only down 69 or 70 points. And then at about 10 minutes to 8 o'clock, so about 20, maybe 20, somewhere in the neighborhood of 20 to 25 minutes into the trading session, the slide began. And the Dow went down 100, and then it went down 120, and then it went down 130, and then it went down 150, and it slid, and it slid, and it slid. And it just kept on sliding gradually but very steadily until we are now at the session lows of the day, down 264 points. And there's no end in sight. It's early in the trading day, and I know when I'm doing a presentation like this, when I'm recording this podcast this early in the trading session, anything could happen. I mean, the markets have barely been open for more than an hour. You've got a lot of trading time in front of you. There's a number of things that could happen today that could just flip this market in reverse and have it trading to the upside. It was only a couple of days ago that the Dow was down well over 200 points early in the trading session, only to rebound and finish ever so slightly in positive territory. And that's, we've had several days this week where the Dow has made more than a 200-point recovery from its lowest point of the trading session. So, when you're trading, and we're down 300 points now, 308, 309, 310, it just gets going. I'm telling you, this could be 1,000-point slide today. I don't think it will be. I don't say that to scare anybody, but the irrational, I almost want to say moronic habits of people controlling huge amounts of money are a detriment to other people in the market. You've got people managing large hedge funds. You've got people managing large brokerage accounts. You've got people managing billions of dollars of assets. And they are sometimes the least rational amongst us when it comes to what they're doing with the money that they're managing, and how they're more spooked. And I kind of sympathize with them just a little bit. They're spooked. Their job is on the line. They worry if this. There's such a herd mentality. I mentioned this before on this program. Someone over here is selling, and oh my gosh, I better sell, because if I don't, and they do, I've got the cover of saying I just did what everybody else did if I sell and I'm proven to be wrong, but I'm not going to lose my job if I don't sell, and our stuff goes down farther than somebody else's does. That this is how they think. They're not looking at numbers. They're not looking at economic data. They're not looking at company profits. They're looking around at their friends and saying, what are you going to do? Because I'm going to do the same thing. And I'm telling you, these are people that we're trusting to manage huge amounts of our money. Get your money out of the hands of these idiot brokers that are just going to lose you money every time something like this happens, and start managing it yourself. Okay, that's enough of a plug of that. So the backdrop to everything that's going on today is that at midnight last night, the tariffs kicked in, and the U.S. and Chinese delegation are in meetings right now. And barring some statement made, the meetings are supposed to end. The Chinese delegation is allegedly scheduled to fly back to China around 4 o'clock Eastern time. That's right when the markets are closing. That means the meetings have got to wrap up a little bit before that. That means you've got to have the meetings concluding, 2 o'clock Eastern time. It's noon my time, a couple hours before the markets have closed. So there is absolutely a possibility. I don't know how strong a possibility, but I would say at least a possibility. I'm maybe not bold enough to go to saying it's a probability, but there is a possibility that when talks are finished for the day and the Chinese delegation is ready to get on a plane and go back to China and report to President Xi everything that got talked about, maybe one of them or a member of the U.S. delegation, somebody gets in front of the camera and says, these were very productive talks. We feel like the talks are back on track. We feel like if we can have another productive, positive round of talks, then maybe we can move to lift these most recent tariffs. It's got to be some commentary like that. If there's not something that sticky sweet, it's got to be that sticky sweet that would give the bargain shoppers, the people that are waiting to buy the dip, if they're not given a reason in that last couple of hours today to buy the dip, then the Dow settling down in the neighborhood of 25,500. That's a very strong level of support for the Dow Jones Industrial Average right now. In fact, that's the only strong level of support that you can point to right now, with the slimmest of hope that the market doesn't break below that. So far, with the Dow being down about 1% today, I believe the total damage on the week, this is for the entire week, I believe the total damage is somewhere in the neighborhood of 3%. I think if we finish, Dow's down 265 points right now. It's almost exactly 1%. We're like 1.03% down. If we finished where we're at right now today, with the Dow being down 1%, that puts us down about 3% on the week. Folks, 3% is not even, by most people's standards, if you're talking technical jargon, by most people's standards, that's not even a technical pullback. That is a blip on the radar. That is a road bump on the way to where you're going. Technically, by definition, a pullback is 5% or more from your most recent high. A correction is 10% or more of a drop from your most recent high. And when you are in a bear market, you have to be 20% below your most recent high. We almost went into a bear market in fourth quarter of last year. The three major indexes fell 19% from their most recent high that we hit in late September, early October, and to that 24th of December, that Christmas Eve low that we hit was 19% on the Dow Jones. We were in a technical correction that almost became a technical bear market. We haven't even hit technical pullback range yet. So there's not, no one should be in major panic mode. But at the same time, that doesn't mean it can't happen. Don't go into next week. Whatever you do, don't go into next week thinking that everything is okay. These tariffs, the ripple effect of these tariffs are going to be felt. They're going to be felt all the way to the wallet of the U.S. consumer. And that's not going to be good for our economy. It could have the desired effect in the long run. It could put enough pressure on China that they're back at the negotiating table. They're being serious. I heard this morning that as the two parties were going into talks, I heard that there were the U.S. someone from the U.S. and I don't know who, because I don't even know if the name of the person was specifically mentioned, and that always makes me just a little bit suspect. But someone said that the position the U.S. was taking going into the talks today is, we're not even discussing with you changes to what we have already fundamentally agreed on. See, the whole problem with these negotiations breaking down is that somehow, some way, Trump got word at the end of last week or over the weekend. President Trump got word that the Chinese were trying to renege on some things that they had already agreed to. There had been some agreements made on intellectual property theft and cracking down on that. There had been some agreements made on the forced forfeiture of intellectual property and patent information and design information and technology. There had been some concessions made by the Chinese on future manipulation of currency. There had been some concessions made on a multitude of other unfair trade practices that the Chinese have been known for decades. They cheat and they play very unfair and they lie about it consistently and have done so for decades. And every country that tries to do business with China suffers this. There was a great article this morning, and I just had a chance to peruse the article, but from the very opening paragraph, I liked the tone of the article. And that is, actually, the article had to do with a Trump tweet. I'm sorry, Donald Trump tweeted about tariffs and how ultimately they'll be damaging to China, they'll be good for our economy, blah, blah, blah. Same thing he tweets all the time when it comes to tariffs. But someone had written some article about that there was a headline about other countries not getting on board and fighting this fight with us. And the article that I liked, or at least the comments that I liked, because I think they were more comments on Twitter about this article, had to do with, why aren't these other countries getting on board and fighting this with us? Because what China is doing is, in fact, affecting these other companies. I made mention of this either yesterday or the day before in the podcast, that we are like the kid that is finally standing up to the bully on the playground. That the U.S. is the new kid in school that recognize, we're not really the new kid in school, that part of the analogy. I just realized as I said that part of the analogy doesn't work. We're the kid in school that is the one kid in class that could stand up to the bully. Kind of has for a long time go along to get along type of attitude, but now we're being pushed a little bit too much, and we're the one kid capable of standing up to the bully. And everyone else at school is cheering for us to stand up to this bully. They want us to take a stand, but they don't want to be too vocal about it. On the off chance that our standing up to the bully doesn't work, they don't want to have appeared at all to take sides, because they don't want to suffer the wrath of the bully if the bully ultimately comes out victorious. And if you're not too old to remember back to grade school or junior high, there's not a grade school or junior high in the free world that doesn't experience this on some level every year. There's some bully that torments every kid around them that's smaller than them, or that they feel they can pick on. And eventually someone stands up and knocks that bully flat on their butt, and everyone is glad and everyone benefits from it. But up until that point, up until that bully gets knocked down, no one else is willing to jump into the fray. No one else is willing to jump in and come to the aid of that valiant person that's standing up to the bully for the first time. Right now, when it comes, every country that China does business with, they screw over. And the intellectual property theft is one of the biggest ways they screw them over, but they flood the market with cheaper products by breaking patent laws. They manipulate their currency. I've mentioned manipulation of currency, and I had one of my students ask me what I specifically meant by manipulation of currency. every time you do business with another country, and I've bought things on Amazon where I've actually bought, and on eBay where I've actually bought from another country. People have bought my education program at Safe Option Strategies from other countries, and sometimes they're saying, well, could you give me this price in euros, or could you give me this price in Australian dollars? And I look at the rate of exchange, and where my program might cost a certain amount US, it's going to be, a third more than that in euros, or a third more than that in British pound, or in Australian dollars or New Zealand dollars or whatever. And I'll look at the math and say, well, if I give you this price in Australian dollars instead of US dollars, then I'm getting this much less. So, and then sometimes it's the opposite. Sometimes they're looking at my price and saying, well, wow, he wants this much for his program. That's only this much in my pricing. No matter where you do business with other countries, unless you happen to be on a 1-for-1, dollar-for-dollar exchange, and every now and then that happens, or it's so close that it's mostly irrelevant. But if it's not, one person gets the short side of that. Your dollar will buy more or less of something when you go to a foreign country. Well, manipulation of currency is where China is constantly changing the value of their currency to always give them the most favorable buying power or the most favorable selling power. Most countries, and that's considered a violation of the World Trade Organization and international law. And countries have to do things at times to stabilize their economy. When the U.S. Treasury is printing tons of money, the value of the dollar goes down. Now that can be beneficial for importers or exporters, or it can help us as it relates to other countries' currencies and our ability to buy or sell to other countries. But we're not supposed to do that. Only what breaks international law and violates the World Trade Organization rules is that we can't be doing it only to get more favorable trade prices for ourselves. If we're doing it for other reasons that are vital to our economy, that's fine. Currency prices are going to change. People make money or lose a lot of money. More often they lose a lot of money in Forex trading based on the fluctuations between different countries' currencies. And all the Forex market is, when you're buying U.S. stocks and U.S. equities and even commodities and futures, you're betting on the profitability or not of any given company. You're betting on the market going up or the market not going up. When you're betting on currencies, it's more like horse racing. It's more like pure gambling. You're betting on this one doing better than this one, or vice versa. It's a much riskier proposition. Anyway, China is notorious for currency manipulation. So these are all pieces of the puzzle that go into what they're trying to do. They've made concessions on all of these things up until this point in these trade wars. And then they started reneging on everything. And the U.S. has put a foot down and said, going into the meetings this morning, we're not even going to talk about the things that you've already agreed to. You've agreed to them. Now, the problem there is that nothing has been signed yet. There is not an agreement in place. It's kind of like, it's a little bit naive. I understand the need to say it, but it's a little bit naive for the U.S. to say, we're not even going to talk about that, because the Chinese can just simply say, well, if you're not going to talk about it, then we have nothing to talk about, because this is negotiating. This is what we do. Yes, we agreed to this in principle, and now we're backing off it a little bit because we want this over here. I mean, that's what negotiations are. Almost everything the market has done has been a partial overreaction. I'm not going to say it's a complete overreaction, simply because of the fact that some of what has happened may have been a little bit necessary. In the face of these tariffs going up, there is an economic impact to it. And the economic impact will eventually, sooner or later, it's going to hit the pocketbook of the American consumer. So that makes it a little bit understandable that there is some sell-off. I think the sell-off has been exaggerated, and I think it's been overblown. And that's where I think the exaggeration or the overreaction to the sell-off has taken place, is that it's just been bigger than it needs to be. But still, all in all, we're talking about, barring, so the Dow is down 280 points right now. Unless we're down 600 points and the week drop is 4% instead of 3%, or unless we're down 900 points and the drop on the week is 5% instead of 3%. Don't get don't get overly freaked out about a 3% drop in the market. It happens. It'd be nice if 3% was over 2 or 3 weeks, because it's a little bit easier to adjust. It's a little bit easier to flow with it. It's a little bit easier to sort of ride it out. When that 3% comes in a week, or 4% or 5%, if that ultimately ends up being what happens, when that comes all in 1 week, that's a much harder pill to swallow. That's where it becomes a lot more challenging to mentally wrap your mind around it and absorb it. But worse things have happened. Don't freak out over it. There is, the bully is going to get beat. The bully is going to, it may not be today. It may be tomorrow. It may be next week. It may be next month. But the bully is going to go down, and everyone in the school is going to benefit from it. China is going to, I believe Donald Trump is going to win this trade war. He's going to make it hurt the Chinese badly enough that they're going to have no choice but to give in. Now, let me tell you right now, we're going to end up with getting a trade deal with China. I absolutely firmly believe this. We're going to end up getting a trade deal with China. And then whether it's after 4 more years of him being in office, or whether he loses election in 2020 and we get some liberal idiot moron socialist in office, whichever one happens, the next administration is going to get worked by China. I'm telling you right now, we're going to get a deal in place, and then China is going to lie and cheat about it until they have a completely different government installed over there, until communism in China dies and they have free elections with a free, honest, democratically elected government over there, and until they embrace capitalism without their pseudo-communist control. They want to be capitalists, but the communists don't want to give up control. You can't have it both ways. It's like Lincoln said famously a century ago, a house divided cannot stand. China wants to be a democratic society, and they want to have communism in place at the same time. It simply does not work. It will fail. But until there is a different government, until the people of China decide that communist rule is over and they want a freely elected democrat society, they're going to continue. The government over there, the communist government, is going to continue to lie and cheat and steal from every country they do business with. So even if we get a deal, which would be a good thing, having a deal in place is a good step. It'll change things temporarily. So our economy has to be able to prosper and grow in spite of it, because things won't change until there's a new government in place over there. So if you're a religious person, if you want to pray that China will end communism, and that it will ultimately be better for the world economy than any of this trivial little trade talk that's going on right now. Folks, I hope you've enjoyed Moving Markets today, and hope you've enjoyed it this week. We'll be back on Monday with more. Thanks, everyone. Have a happy Mother's Day to everyone out there. By the way, before I end, happy Mother's Day to all the mothers out there. Wherever you're at, God bless you. Being a mother is the most underappreciated job in the world by most standards, and is probably the hardest job in the world. But for those of us that get it, it is the most appreciated job in the world. So to all of you mothers out there, thank you. Have a happy Mother's Day. Bye-bye.